Hello everyone and welcome to ICM's midday session. Today we are rating key economic indicators to come out, the US jobs report. It's one of the main reports that investors do look at, especially at the current time since we're just weighing the impact of the second wave of coronavirus on the US economy. So definitely these numbers are key to check what's happening with the US economy. So among the expectations, the non-farm payrolls is expected to come around 470,000. Way less than the previous reading of 638,000, and the unemployment rate to just tick slightly lower to 6.8 from 6.9%. So any surprises, positive surprises for the jobs report, this could be very supportive to the risk on sentiment, especially that investors are just afraid that the current wave is weighing on the economy, and this could lead to maybe to a double dip recession if it persists. So that's why these economic indicators, they're just too important to look at today. In the morning, we had construction PMI from the United Kingdom, which came out at 54.7, better than expected and better than the previous reading. This is just signaling that the construction sector in the United Kingdom is just recovering in a good way. On the charts, the dollar continued to weaken against majors. The euro dollar rallied to almost 21.77, which is the highest since 2018. We're just getting closer to the 122.15 to 122.20 area that we highlighted previously, which was the bottom of the range traded during the first quarter of 2018. So almost here we're waiting for some resistance. Also, there's a channel that was formed. So between the tops and bottoms, the recent tops and bottoms, you can just draw parallel lines, and you can see the channel that we are currently trading at. So watch out for any reversals, any breaks, but definitely this will be the impact of the jobs report. So you better watch out since the data is just important and could add volatility to the market. In terms of levels, today's support, which was also yesterday's resistance, almost 21.30, 21.20 could be the interim support, the first level of support, while also you can just you can note the previous 2085, which was the previous top, to also be another support, which is just closing to the 100-hour exponential moving average. So these are the key levels for the euro against the United States dollar. The British pound, we're having a volatile session, especially among the headlines regarding Brexit. So this is just adding volatility to the market. There are just doubts over reaching a Brexit deal, but also there are some sources they're saying that there is progress on the deal. So this is just what's leading the market into a sideways move. Yesterday we were able to rise towards 135, the highest this year. Also, we can denote 35.80 as the coming resistance area, and this could be dragged by another positive headline regarding Brexit. So this could be the coming rally. While support is seen near the 100-hour exponential moving average, which was also the previous top of the previous consolidation zone. So 134 is a key level ahead of definitely 132.85, the other support zone. So this is all for the British pound against the US dollar. The dollar against the Japanese yen continued to trade in a sideways. We're stuck in the range between 104.75 and 103.65. So this is a 100-point range. We're just trading sideways. But definitely the jobs report will lead to higher volatility on the pair. Usually it's one of the good movers for the dollar against the Japanese yen. These are the possible levels that we could be testing if we were able to break out of this consolidation zone. The dollar against the Swiss franc continued to weaken. We saw the dollar Swissy falling below 89 for the first time in a couple of years. We're seeing the extension of the move, how far the price is away from the 100 and 200-hour exponential moving average. So this just could suggest some corrections higher. If we just need to set possible levels, you can just denote the previous bottoms. 89.80 was a clear support previously, so this could be the first rebound level. If we want to have a bigger correction, this could be the first rebound level. In terms of supports, you can just, since it's a long time that we didn't drop to. It's a long time we didn't trade at these levels. You have to go back in the charts to just check some previous bottoms. It's just far away from what we were trading currently. We're currently near 89, but the previous bottom was almost near 86.90, which is almost 200 pips away. So what you can do is just set some extensions and go for these extensions as targets. So this is for the dollar against the Swiss franc. Australian dollar against the United States dollar, we're just witnessing some move higher today. We were able to test 74.50. The coming resistance zone is near 75, while support remains at the previous top of almost 74.10. So any drop back below this support zone could just drive us lower towards the trend line, and ahead of the trend line, the 200-hour exponential moving average. The New Zealand dollar against the United States dollar, you can see how the 100-hour exponential moving average was supportive. So we were trending since November. It's a clear trend, but currently we're just having a bit of a sideways move and a bit of weakness in the momentum. So this could just signal a possible correction. You can just draw a trend line combining the previous bottoms for possible retracement to this trend line, which almost coincides with the 200-hour exponential moving average, which also is close to the 70 level, which is a key level for the New Zealand dollar against the United States dollar. Another move higher back above 70.85 could just open the way for another test above 71 zone. The dollar against the Canadian dollar also continued to trade lower. We're still trading at the bottom of the channel. So if you just draw the channel, we're currently trading at the bottom, but trading sideways near this bottom. So you can just check it out. We're just stalling for the past couple of hours. No volatility on the pair and just stuck at the bottom of this channel. Also, we have the Canadian jobs report, which could also drive the prices either way. On a worse or on a soft reading, a jobs reading, this could drive the pair higher towards the upper side of the channel, which is almost between the 100 and 200-hour exponential moving average, back towards 129.30, while a dip lower or a strong reading or weakness in dollar could just drive the prices lower back to the previous bottom, almost near 27.85. Gold prices, they're stuck in a tight range following this rally. So we had a correction towards 1823 yesterday. You can just check this point by just drawing these bottoms following this rally. So you can just draw it. You can just monitor this trend line for a possible break below it. We can go for the previous resistance zones, which could be turning the previous support zones, which could be turning into resistance. This is just a key level, while minor support is present at 1830, first minor support, and then yesterday's low 1823, which is the 100 and 200-hour exponential moving average currently. So you can see this sideways move here. It's just stock. We're just trading sideways for a while. Despite this drop lower, we're trading sideways awaiting the jobs report. Silver is just having similar formation. You can draw the bottoms here, and at the top you can draw this line here. So we're having almost an ascending triangle now. Yesterday it was like this, but the break wasn't on good volume, so we're having almost an ascending triangle following this rally to the upside. I just want to remind you with this trend line, we're on softer report. If commodities are just gonna push higher, maybe we could be retesting this trend line. So this is for silver. Moving to oil, which was edging higher following OPEC's decision. They decided to just add 500,000 barrels for 3 months in the market. This is not what the market was expecting, but that's why we didn't witness a sharp rally. It's just a bit of movement to the upside. Possible resistance is just near almost $47 to barrel, $47.20. This could be the coming resistance zone, while a drop back below almost the previous top, or this line here, which was a key area, 46 to 45.80. A drop below it could just drive us lower back towards $44 a barrel. Dow Jones, following yesterday's rise, we had a bit of a correction, and then the market continued higher today, testing yesterday's high, 30,000, almost 30,107. So this is just the top. You can point this channel that we're currently trading at also, and the break back below the trend line or the bottom line of the channel could just drive prices lower towards the previous trend line, combining the previous lows. So if you just have to zoom back, you can see the structure that we're trading. We're having a sideways up movement inside this channel. We're just trending up, and the moves were capped by yesterday's high, and also we have the possible resistance near the previous stop. So this level here, this area between 30,100, 30,200 could be capped with selling pressure or selling orders. Any break back below the lower side of the channel could just lead to a retest to the 100 and 200 RX on moving average, and then a bigger extent towards the trend line, which sits at almost 29,700 today. This is all for today's session. You have to just be careful when trading the news, and especially the jobs report is it leads usually to high volatility in the market, so you better stick to your risk management techniques. This is all for today's session. All the information, news, analysis, and opinions mentioned, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. Thank you all for joining, and have a safe